All right, everybody, let's just go over the markets and what opportunities were available and what signals work and what signals failed. All right, so we'll just go over ES. In the morning, the buyers started buying, but it just didn't work out. I don't know where it was. Oh, right here. So you had that strength that came in earlier in the morning, and then the market failed. So you had, I think it was like 28,000 contracts. And this was the biggest price wave in 22 waves, biggest volume in 6 waves, with a minor breakout right over here. You can very clearly see that the waves broke this little high over here, this minor creek, had a breakout, fall through, and then made a higher high. So then it pulled back, and after that, thrusted up right there. So that thrust meant we were going higher, especially when it attempted to take this low and reversed up instead of having fall through to the downside. All right, so that put the market in a good position to go up. But it tried once, it tried twice, it tried 3 times, and you had this minor breakdown right here, which initiated this entire move. And so once this happens, you can try to get in on the other side because this is a clear failure. And there was a pullback right here on the short side. So it rallied down, pullback, and then you had a thrust reversal right here, which allowed for the pullback trade entry and then continuation to the downside. After that, they came in right here, turned the market with the biggest buying in 36 waves. You can see from the volume here, just buy right here. And then, but remember, this is the downtrend now on higher time frames. So typically when you have reversals that are counter trend reversals, they have springs and upthrusts associated with the sign of strength and the sign of weakness. So this sign of strength and this change in behavior, this big buying right here, because it's in a downtrend, you have to get ready for that shakeout or that spring. That's what this is. All right, and this now is going higher, but I think it's just turned right here again. Expecting more downside activity. This is the first time it's taken out the hourly low. It's the hourly low, rally, breaks the hourly low. It's in trouble. Target would probably be the next hourly low. So on the pullback, and you'll see it's going to be a pullback. You'll see get a decent pullback and reversal, and that should initiate the down move to continue to the downside and take this low. On gold, I mean, this market, the selling came, but it just didn't give a pullback. You can very clearly see there's clear selling here, but it just didn't give any pullback. So it's going to trend back up, and then maybe we'll get another reversal. But unfortunately, when it does this and it doesn't give a pullback, you don't have a way of getting in because the risk is too high. The risk is above these highs. So this was the selling in gold, but no opportunity to get in. In the euro, this was the initial selling. Didn't exactly have a good pullback. Actually, it's not a bad pullback, but it did an upthrust, and there's strength in this market. So remember, when you counter trending turning point, you have to be very careful and expect upthrust and springs on selling waves in an uptrend. Like when you have a change in behavior, expect an upthrust. And on buying waves, when you have a bullish change in behavior, expect a spring. Because that's what happens when you counter trend. It's almost always, not always, but a lot of times it happens, and you just have to either re-enter or just expect it and know how to manage it. All right, now what we have is some selling. You have that low and breakouts to the upside. Again, this is all because it's up thrusting or testing extreme highs because the market has one of two conditions. Either you're counter trending or there's a lot of relative strength in that market. So when there's a lot of relative strength, you're going to have, this type of chop or this type of behavior. All right, that's what happens. All right, next is crude oil. I don't really see anything in crude. Just the initial selling, and then it just kept on going down. Natural gas actually had a trade, but unfortunately it didn't work, and I think it has to do with how strong this market is. It had a trade right here. Biggest selling in 13 waves. Biggest wave in 9 waves. Biggest down wave in 9 waves. Took out the prior hour low. The only problem is the strength that came from the break. See, over here you have a lot of selling, but here you just had too much buying. So when this thing is not going to work, it usually gives you an indication. What is that indication? That they're buying the break. So this is the break, right? And they're buying the break. How do you know? It's the biggest buying in 12 waves. So what you want to see is weakness on the pullbacks, telling you it's going to, break down. But if they're buying the break, you'll see heavy volume come back in. So they bought the break here. So you have a break. Now you want to see weakness, but if there's strength, that means they're buying the break, and that's what led to the higher highs up to here. Finally, Bitcoin is a disaster. I'm not really sure. Yeah, I mean, if you're going to trade something like this, you just have to wait for pullbacks and then get that reversal. So you had it right there. Where's my mouse? You had it right there. Here you didn't have it. Here you had it right here. Very clearly see the red bar reversal. That's what you look for when you have downtrend, selling, pullback, bang, right there. And now it's trying to. There's some covering going on. That's why you have like this little change of behavior. Why? Because they're gonna bounce it up a little and maybe sell it back. So what happens is in this situation, when the market's overextended, there's just some buying activity that came in, and that's what this is. It's just some buying activity. So it's doing a reversal, but it's a little reversal with some buying here and some buying here. This one was the biggest upwave in 28 waves. And again, you have to be really careful because these are counter trend. All right, these are counter trend turning points. Counter trend turning points are bounces that get sold off, and they also have springs and upthrusts associated with them. So that's what's going on here. All right. Good thing is that you have low volume pullback, low volume pullback, low volume pullback. Now look at this. Is that low volume pullback? No. It means that bounce is finally going to get sold off. The rallies are. The breakdown and rally is coming back into the market. So I'm looking for this to break lower. How do you trade this? If you're bearish, just pull back, reversal, and done. All right, that's all I have. Did I go over copper? There's a move here, right? But it didn't pull back. It's very clear. You have the move right there. You have the reversal to go higher right here, right? So this is the buying activity, and then you have a reversal, and it goes up. But the problem is, it didn't pull back enough. So there's no point in taking high risk one-to-one trades. There's no point. If you get in here and the stop is there, the most you're going to make is one-to-one, and we don't take that. All right. That's all, folks. Have a good day. Bye.